Hello friends. So friends, let us continue with non-profit organization, right? Now, under the non-profit organization, in the last lecture, what we started with the various adjustments, right? This is what we started with, the various adjustments. Now, under the adjustments, we discussed first subscriptions, right? Now, I told you that these adjustments are mostly done at the stage of income and expenditure account or balance sheet, right? Why not at the time of receipt and payment? Because in the receipts and payment account, we have to record everything, whatever is coming into the pocket or whatever is going out of the pocket, we have to record that, except the non-cash transactions, right? So there is very narrow scope of adjustments, I would say, in receipt and payment account. So all the adjustments are to be done at the level of income and expenditure account or the balance sheet. Clear? So first we discussed was subscriptions, and second we discussed about entrance fee, right? Now this is, we discussed the subscriptions, how to calculate the subscriptions, right? Adding and subtracting the various outstanding subscriptions and the advance received, right? And then we discussed about the entrance fee. That entrance fee is for those persons who want to become the member of the non-profit organization, right? The fee is paid by them. Now we discussed there are various treatments of entrance fee. It can be capitalized, it can be taken to revenue account if the amount is small, right? So now what we are going to start now is the third type of adjustment, that is donations, right? Now what is donations? You all know, right? Any amount voluntarily given by. Now who can give this amount? This amount can be given by any person or any firm or any company, right? Now this amount can be in cash or in kind. Clear? So this is the case of donations in case of non-profit organization. Now how to treat these donations while we are preparing the income and expenditure account and the balance sheet? They say you can treat it in the two ways. The first one is, if the amount is small, right, and recurring in nature. Recurring in nature means you have decided to give 1,000. You have decided to give rupees 1,000 every month to an NPO. So it is recurring in nature, a small amount and recurring. Recurring means you are paying it at the regular intervals. Again and again you are paying that, right? In this case, if it is small and recurring in nature, then you can take it to income and expenditure account, right? Second is, if it is for specific purpose, if it is for specific purpose, then it should be treated accordingly. Then it should be treated accordingly. For example, you have a building fund. Now, what is a building fund? That is, your NPO wants to construct a building. For that, they have set aside an amount that this will be used only for the construction of building. That is, they have created a fund. Fund is what? It is a cash only that is set aside for a particular purpose. Now, the purpose here is the construction of building. You are having a building fund of say 10,000 rupees. Now you receive donation for this building. You receive donation for building. Right? Now this donation is for a specific purpose. Now if it is for a specific purpose, then this donation will be added to the building fund. Say 5,000 rupees. Your total building fund will be 15,000 rupees. And where will this building fund appear? This will appear in the balance sheet. On which side? Asset side or liability side? This will appear on liability side of balance sheet. Clear? So if the donation is for a specific purpose, then it should be treated according to that specific purpose. Clear, friends? Right? So this is how the donation should be treated. If the question is silent, see in the exam, if the question is silent, then go on the merit basis. If the amount is small, then you can treat it as income and expenditure account. And again, I will say that you should give the note at the bottom of the answer that because the donation amount is small, so it has been treated as income and therefore shown it as income and expenditure account. Clear? Now, this was all about donation. Right? Now, next we are going to talk about legacies. Right? Now, what is legacies? There are four members of an NPO. There is an NPO. There are four persons, A, B, C and D. Now out of these, this person B dies. Right? And before he dies, he has written in his will that when I die, out of the amount that is lying in my accounts, or that the amount that is lying to my name, out of that amount 40,000 should be given to my NPO. Right? There is an NPO. There are four members to the NPO, A, B, C and D. Now B dies, right? And before dying, he has written in his will that after I die, whatever amount is due in my name, out of that amount 40,000 should be given to that NPO. Right? Now what to do this with 40,000? Again, they have given the two treatments. They say if this 40,000 is for specific purpose. Now if before dying the B writes that this 40,000 should be used only for the construction of building, then this is a specific purpose. Then it will be used for that specific purpose only. That is, if it is for the building, then it will be added to building fund. Clear? If there is no specific purpose given, right? If I say if there is no specific purpose, then what to do with this legacy? Then straight away add it to capital fund. Right? Add it to capital fund, right? So be careful here. The legacies you don't have to take to income and expenditure account. That is not your income. Clear? That is not your income. So in case the legacy is for a specific purpose, then it will be used for that purpose only, right? And if the legacy is not for any specific purpose, then it should be added to the capital fund. Now where this capital fund is shown? This capital fund is shown in liability side of balance sheet, right? All the funds to be shown on liability side of balance sheet. Clear? Right? So this is about the legacies. So if you have the legacies, anything related to legacies, so keep this in mind and treat accordingly, right? Now, next, fifth. Now, fifth, we have government aids. Now, sometimes what happens that an NPO can receive an aid from the government also, right? The government also help the NPOs who are doing a good work in social cause, right? The government is also, to encourage such NPOs, the government also sometimes provides some sort of assistance in the form of aid. Clear? Now, whatever the government aids are received, how to treat these aids? Now, if we talk about the government aids, this government aid can be of two types. One is general aid, right? And the second one is specific aid. Now this general aid is given for any purpose. There is no specific purpose defined that why government is giving this aid. It is for the general functioning of the NPO, this general aid, right? Now if it is to be general aid, then you have to treat it as revenue receipt. And where you show this revenue receipt? Revenue receipt to be shown in income and expenditure account. Clear? If there is no specific purpose defined for the government aids, then what you have to do, you have to consider it as revenue receipt and show it in the income and expenditure account. Now, if it is for the specific purpose, then you have to treat it accordingly. Right? Now, you know how to treat the specific purpose, like if it is for the building, right? Or the alternative is, if no specific purpose is given, but it says that we are giving this for this reason, then you can add it to the capital fund also. You can capitalize it and add it to the capital fund. Clear? So government aid, if it is for the general purpose, not any specific purpose is given, then you have to treat it as revenue receipt and it is to be shown in the income and expenditure side, income and expenditure account. Right? If the government aid is for the specific purpose, then it is to be treated as capital receipts and should be added to capital fund. Right? Or if the question says that it is to be treated in some specific way, then you have to treat it accordingly. Right? If no specific treatment is given, then add it to the capital fund straight away. Clear? So this is how you will be treating the government aids that are received from government to the NPOs. Right? Now, next, sixth, sale of fixed assets. Now this is important, listen to this very carefully, right? Let's take an example. asset having book value of rupees 1 lakh sold for rupees 1,20,000. Right? Now, if you are preparing the accounts of the NPO, what treatment you will give to this problem? Asset whose book value is 1 lakh rupees, it is sold in the market for 1,20,000 rupees. First tell me, how will you show it in the receipts and payment account? How you will show it in the receipt and payment account? The first and foremost thing is, it is a receipt. If it is a receipt, it is to be shown on debit side, right? You will say to sale of asset. Now, what is the amount that you will take? You will take 1 lakh or 1,20,000. Now tell me, what is the amount that you are going to take? Receipt and payment account says whatever the actual money is coming to your pocket, you have to record that. Now, what is the actual money coming to the pocket? 1 lakh or 1,20,000? Sir, 1,20,000. The money that is coming to your pocket is 1,20,000. So we will record 1,20,000. Now, income and expenditure account. Now, what will you show in the income and expenditure account? Now, it is an income or an expense? Sir, it is an income. Okay. Sir, should I show 1,20,000 in the income and expenditure account also? Sir, no. Then what will I show? I will just show the profit here. Profit on sale of asset. How much? 20,000. Clear? Right? Now, what about the balance sheet? How will I show it in the balance sheet? In the balance sheet, say my asset is appearing, the total of that asset is appearing at 5 lakh. Right? So I have sold asset having the book value of 1 lakh. So what is my book value of asset left? 4 lakh rupees. Clear? So this is how you are going to show the treatment of sale of fixed asset. Whatever the proceeds are from the sale, the total amount will be taken to receipt and payment account. Clear? Because receipt and payment account says whatever is actually coming to your pocket, you have to record that. So you will record the whole of the amount, 1,20,000, whatever is coming to your account. Clear? What is to be shown in the income and expenditure account, just like you show the profit in the profit and loss account, sale of asset. In the profit and loss account, you show only the profit or the loss on sale. Similarly, in the income and expenditure account, you will show only the profit on the sale of asset. Rest of the value of 1 lakh will be shown in the balance sheet. Right? Subtracted from the total book value of the asset. See, 1,20,000 we received here. Out of this 1,20,000, 20,000 is recorded in the income and expenditure account and 1 lakh is recorded in the balance sheet. Clear? So this is very important. Be careful while you are doing the treatment of fixed assets, right? That where you want to take the profit, where you want to take the book value, and where you want to take the proceeds. What is proceeds? Proceeds, it's book value plus the profit, right? So total proceeds are taken to receipt and payment account, book value is taken to balance sheet, and profit is taken to income and expenditure account. Clear? So be very careful while you do this. right? Now, next, number 7. Number 7 is consumable items. Right? Now, what are consumable items? These consumable items are day-to-day usage items. Day-to-day usage items. For example, stationery. Right? So stationery you will be using on the daily basis. Right? Medicines can be there. So these are all consumable items, like small items which are used on daily basis. Now, how to treat this consumable items? Any expenditure on these consumable items is to be directly taken to income and expenditure account, because these are small items, these are day-to-day usage items, recurring items, right? So it will be taken to income and expenditure account on the expenditure side, right? On the expenditure side, you will show the expenses on the consumable items. What are consumable items? The daily usage items, right? Whose value is also not too big. Clear? So these will be taken to income and expenditure account. Clear? So friends, these were all the adjustments, basically what is given in the NPO. So I hope the adjustments are clear, right? Just focus on the concepts that I have covered, right? And focus on go through the adjustments thoroughly once, right? What we have covered, try to understand each and everything what we have covered. Clear? Now, one small topic that we have in the non-profit organization, that is fund-based accounting. Now, what is this fund-based accounting? We have discussed about the capital fund, right? Now, if we talk about the NPO, there can be various funds. One is the capital fund, that is the main fund, right? This comprises of subscriptions plus entrance fee plus surplus. This is the main fund. Now, some of the funds are created. First, try to understand what is a fund. Fund is nothing but a cash set aside for a specific purpose. If it is a specific fund, right? Now, specific funds can be like building fund, right? So the NPO decides that 5 lakh rupees should be set aside for the construction of buildings. That constitutes a building fund. Another thing can be prize fund. Your NPO wants to give away the prizes, right, to the children who are doing very good in the examinations, poor children who are doing good. Now for that you decide to set aside 2 lakh rupees as a prize fund. So fund is nothing but an amount that is set aside for a specific purpose. Clear? So there can be specific funds. Now we have discussed if the donations are received for a specific purpose, then they should be added to the specific funds. Like we discussed in the donations. We discussed there the building fund. We discussed the building fund there. Government aids, legacies, yes, donations here, right? So if the donation is received for a specific purpose, like here donation for building, then it should be added to this fund. Clearly, if the donation is for the prize fund, then it should be treated accordingly, right? Now, one important point here to understand is an NPO created a building fund of rupees 1 lakh rupees, right? and it received the donation for building of rupees 50,000 rupees, right? Total is 1,50,000. Now out of this 1,50,000, the construction of building is completed. Construction of building is completed and it took 1,20,000 expense, right? You have a fund of 1,50,000, but on the construction of building there was an expense of 1,20,000. Now what is to be done with the remaining 30,000? Now that the purpose for which this building fund was created is complete, right? This building fund was created for the purpose of construction of building. Now that the construction of building is complete, but we are left with 30,000 as the building fund even after the construction of building. Now what to do with this 30,000? They say do nothing, transfer this 30,000 to your capital fund. Transfer to capital fund. Clear? So that means if any fund is created for a specific purpose, right? Listen to it very carefully. If a fund is created for a specific purpose, you can write this down, right? If a fund is created for a specific purpose, then after the completion of that purpose, if there is balance in the fund, that should be transferred to capital fund. Clear? So this was a small point that was important under the fund based accounting, right? Funds is nothing but an amount that is set aside for a specific purpose, right? So it says if you have set aside an amount for a specific purpose, so on the completion of that specific purpose, if there is any amount left, right, then that amount should be transferred back to capital fund. Clear? That should be transferred back to capital fund, right? So friends, as far as the concepts of the non-profit organization, I have covered almost everything, right? Still, if you find anything that I may have left, right, just let me know. Clear? So I'm not going into the practical problems on this. I will request you people to do the practical problems, right, from the NCERT or from any other book that you are referring. T.S. Garewal can be there. So any book that you are using, do the practical problems, right? But before doing the practical problems, go through the concepts thoroughly, right? I have covered the concepts. I have tried to make the concepts easy for you people. Go through the practical problems. If you find any kind of a difficulty in doing some practical problem, just let me know. Send me an email at ksjteaching@gmail.com, right? So from the concept wise, we are done with the NPO. Just try to do some practical problems on this, right? Using these concepts, using the adjustments, right? So in an exam, what is important? Important is to understand the concept. You should know the concept. If you know the concept, then the question is half done, right? Then you have to just apply those concepts to solve the problem, right? If you know the concept, half the problem is done there only. Clear? So I have tried that to make the concepts as easy as possible for you people, and I hope that you have enjoyed the concepts, you have understood the concepts, right? Still, if you have any problem, you can write to me anytime. You can send me the question anytime to ksjteaching@gmail.com, right? So that's all for this lecture, friends. Thank you so much.